as a result.
Hello and welcome to Analyst Hangout. I am Perpetual Fast and Repeater. Well, this beautiful Friday evening, I am joined by three gentlemen. I have Ambrose Amodio, the Chief Research Officer in Visitor Consulting Limited. He's right here with me in the studio. Thank you for joining us today.
Thanks again for having me.
Always. And virtually, I'm joined by Kasim Garuba Kurfi, the MD CEO, APT Securities. Thank you for joining us, Mr. Kurfi.
Thank you for having me.
All right. And we're also joined by Mukhtar Mohammed, CEO, Finance with Mukhtar. Thank you for joining us, Mr. Mukhtar.
Perpetua, it's a pleasure. I'm being here with the boss himself. It's intimidating, and so you let the boss
you don't have to be. I mean, you are good.
We're together, no problem.
All right, so we start with the stock markets now. Nigerian equities markets closed positive as the key market indicator advanced by 64.52 basis points. The NGX All-Share Index advanced by 0.1% to close at 44,396.73 basis points. And of course, we saw the reversal that started yesterday where we started having positives. But of course, are quite negligible if you ask me. But let's have your thoughts. What do you think is happening?
Actually, you remember I said that this week, because of the NECs that kicked off last week Friday, we expect a miss market, and that is what really has happened. But actually, the life of Airtel has really brought the market to where the market is today. I will tell you that was kind of a big hit on the market. The big cap like stock dealing for straight 3 days brought the market down with almost 30.2% down. But it's good that at this time investors are looking at not only the market All-Share Index, are looking at sectorial indices to guide them to their investment, and also individual stocks that have a good fundamental and also positive technical analysis also to guide their decision. But for me, as the NECs that just kicked off, is for investors to look at why people selling Airtel. It's just not because Airtel is bad or the fundamental has changed, because the price and already in any season have less than 2 months to end of the year. Again, for that, people are looking at where can I get a bigger dividend yield compared to what Airtel is giving. But Airtel dropping to this price become attractive for also some investors to take decision, but to take a position. But I believe that what we're seeing is called sectoral rotation, looking for where or which sector that has potential to sustain this positive trend. We saw what came from UCAP, what came from Afra Prudential, the one that came from the utility sector. I talk of people are looking at where can I go now so that at the end of the day I will get a better return, knowing that we're already in an inflationary environment. For that, people are looking at one point to the other, and that is how to invest. You don't just because others are buying here, you must have what is guiding you in the market. For me, it's a good market, but I believe that we want to see more earnings, especially from those high cap stocks and the big banking sector, energy. That also change the trend of the market. But I believe that we should not panic. I will tell investors that our market is still good. We are still in a positive terrain. But also, like my colleague asked me in the office, is this NEC is going to save the market, going to negative? I say yes, market will not enter negative. Already we're moved from around 24 down to almost 8 or 3% something down on the All-Share Index, but still market will likely close positive. Might not be as much as 10%, but still market closing positive this year.
All right, that's interesting. Well, Mukhtar, let's have your thought on that. Do you agree with Ambrose?
I think I'll drag down the market, but again, what I need to add is you need to look at the microeconomy and economic sides of the economy. The market cannot be separated from the economy. And again, you mustn't forget that we say this market needs a trigger. The trigger will come when the third quarter result comes in, and also if there's any other trigger that the market will need, will be that from the physical side. Is there any policy that would drive the market forward? So definitely, I totally agree with him. But just to add that, and like you said, I think it's a good entry point for a lot of investors when you are looking at the stocks that are there and their price as today, and if you calculate that with the dividend yield that you expect, because some of these stocks, I'm not sure they will pay anything different from what they paid last year. But when you compare the price that they were last year and the price they are now, it's a good position for investors to look at. And I think, like I said, the market needs a trigger. when those any result begins to come in, especially from the first tier bank and also from a new bank that is trying to pull the string, maybe Fidelity Bank will be added to it, FCMB in the second tier bank, we could see a game changer. But for now, I think we'll continue to see those ups and downs, good opportunity to enter. And again, like I said the last time I was here, the investors that are playing the equity market as it stands now are not the normal investors. You know what I mean? The normal investors, you're talking about investors that are there for the long haul. What we have now, those that used to play the treasury bill space, because of the low yield they used to have, they come into the equity market. And some of them are exiting when they see good price, good exit point in the equity market to move into the fixed income money market, treasury bill and bond. And then when they see the price again, they come into the equity market. So what we have are investors that are not there for the long time. So definitely will not enjoy the kind of bullish run that we used to enjoy when you have you have a foreign investor that is going to be there for the next 6 months, 1 year, and the market keep moving like that. But for now, I think we'll continue to see those ups and downs.
All right. Well, Mr. Kofi, let's have your thoughts before we move on to the other stuff we want to talk about today.
I look different.
Okay. Go ahead. We can hear you, Mr. Kofi. All right, I guess we are having a connection issue right there. Well, moving on, the Minister of Finance, Budget and National Planning, Dr. Zainab Ahmed, said she has received approval to securitize the Central Bank of Nigeria, that is CBN's 20 trillion naira worth Ways and Means portfolio. According to the minister, the total Ways and Means is 20 trillion and the securitization will be over a 40-year period with an interest rate of 9%. Recall that the CBN's Ways and Means balance climbed to 22.068 trillion naira in August 2022 from 16.1 trillion naira in August 2021. This represents a 36% increase year-on-year. However, the Apex Bank complained that excessive borrowing by the federal government from the CBN's Ways and Means advances window could frustrate CBN's monetary policy. I had to hold it because you were going to make me laugh. I think I should just start with you. But why did you laugh at that point when we talked about the CBN saying that this really isn't good?
Is the Minister of Finance just waking up when they are taking excess from CBN? They know that they are overdrawing from CBN or CBN? Are they just saying that they start a complaint? Why complaining? You know, you want to be giving the federal government excess from what you have. For me, like he just said, if we really want to move this economy forward, let them not rely on the monetary aspect alone. Authority, the two of them want to shake hands and give us a kind of a good policy. We have seen a lot of mismatched policy from the central bank, from the the fiscal authority, even from the economic managers, that the economy is moving front and back, not having a steady movement. We see that even the GDP we saw for second quarter was just for me very weak and very very fragile. But I believe that if we have good consistent policy, whatever what is happening in the global economy, I know yes, it's not only Nigeria, it's a global thing, but I think we can learn from other climate that we are seeing the way they manage the economy, despite all that is happening. Why others that choose to manage the way we see what is happening in UK, because that is where they choose inconsistent political environment, shaking financial stability. All these are things that we should look at. If we want to go that way, we should learn from there and also change our policy so that at the end of the day, yes, investors should not panic. The economy, like my colleague said earlier, that we can't separate the economy from the market, but I tell you at times, the stock market is a lead indicator telling you what is happening in the economy. But we believe that once we've seen another change, another trend, we know where the economy is going. But I believe investors should not just panic. Let's just see what the authority will come out to further kind of a direction for the economy. The economy is just moving in circle. We need to step up and move ahead. I believe that actually we'll see real policy that will change this economy immediately after the election.
All right. Well, I need you to confirm if you can hear me, Mr. Kofi.
Yes, I hear you loud and clear. I don't know if you hear me.
All right,
yes,
I can hear you. Now, this is according to Section 38 of the CBN Act. Ways and means granted cannot exceed 5% of federal government's actual revenue for the previous year. That's one. And then it must be repaid in full within the financial year it is granted. And then fresh advances cannot be granted until the previous one is paid off and cannot be repaid through promissory notes or securitization. Now, this is what the rule says. This is what the CBN Act says about ways and means. Now, with this announcement, isn't this a deviation from what should be?
Well, I can tell you that that law is there, but they did not abide by it. And there is no way they will abide by it because of the situation they found themselves. Today, the government expenditure is being funded by means and ways. And there is no doubt over it. Look at last year, 2021. How much revenue did the government generate? Less than 7 trillion. So if you cannot borrow, you have to look at means and ways. And the means and way is what brings the inflation to the economy. Because when you are just printing money for the sake of meeting up your expenditure, the value of the money go down. And that's what the economy is facing. And that is the reality. So they cannot follow the rules. Even when they are talking to securitize it, I wonder. Because what it means that more fund will be spent for servicing the debt. That if they are getting it through means and way without paying, now by the time they securitize it, they are going to pay more. And therefore, what they would spend in servicing the debt will be much higher than what they even estimated. I think the best way is the way they have taken now. They are addressing the leakages in the petroleum sectors, and we can see that they are hoping to increase the productivity, and that will bring more dollar, and that will strengthen the value of the naira and reduce the expenditure of the government by the means and ways. Except they do that, I don't think this way they will follow it. The rule, they have already violated the rule because nobody checked the auditor. They are the one that said the rule, and nobody can look at them and say that we are against the rules.
All right. Well, Mukhtar, before I come to you, I'd like you to just react to what Al-Haji said now.
It's not saying anything new that all of us have not known. This has been an administration that has not managed the economy well, either with the exchange rate, either with policy statement, either with a lot of things that they have done.
But let me come in here. Why are we not seeing resignations the way we are seeing in the UK? Is our own policy different? I mean, people make mistakes, they own up, and then they leave the scene for other people who are more capable. Why isn't that happening?
Has anybody told you that they made any mistake?
Okay.
The CBN governor was busy collecting an award of recent. So if he is making mistake, why is he being awarded, giving award? So to have managed the economy, and they compare our economy with Ghana, they compare our economy with other economies with Zimbabwe, and they say the CBN governor is able to manage the economy very well. So when the man that is collecting an award, how will you now resign? What are you telling him? He's doing well globally. According to him, he has done all the policy that he needs to do. I want to, just like Alhaji said, when it comes to the ways, the means and ways, I need to know that they did not contradict the CBN Act. The only way they would have contradicted the CBN Act, especially in if CBN underwrite it, or CBN is going to pay off some of the debt from the means and ways. The only way they have contradicted the act was the one that you said about the 5%. But outside of that, they've not done anything differently. So I think they are still okay. And remember again, they can also exceed that limit by that is 5% limit if the country is going through any security challenges or so. And if you look at it, the president can tell you that we've been going through security challenges. We have to buy a lot of military hardware so that we'll be able to deal with banditry and terrorism. So he may use that to have his way, and that's the reason why they say they've gone above the 5% limit. If you ask them that, I can assure you that that's what they will tell you.
Well, some analysts, let's look at what the impact this will have on the market now. Some analysts have said yields on fixed interest securities will rise further amidst, the plan to securitize ways and means funds. What are your thoughts?
I totally agree with them. I've seen that happening with some of the numbers that have come out, from the fixed income space today. Some of them are doing almost 16%. But again, you see, they will calculate if 16% based on, is it going to be 16%? But by the time you do the calculation and everything, you realize that based on if you are using 5 million, you are not getting up to that 16% over the 90 days or 100 and unless you are doing up to 150 days, and maybe you are going to the 360 something days. And if you look at that by and by the market, you will definitely know that the market will be better, give you better return, even if it's a dividend yield, a loan, and also the capital appreciation we expect depending on the stocks that you are into. So definitely for safe nets, investors will still look at that way. But for any investor that is shrewd and is ready to take risks, I think there's no better time to be in the equity market than now.
Okay. Well, I'd like you to comment on what you just said. And once you're done, I'd like you to talk about, this securitization. How will it work?
No, actually, from what Elijah and Mr. Mustafa just said, we have seen that the means and ways has always been there, but the way you approach it matters a lot. Even in advanced economy, they do that, but the way you manage it, like here now, because we want to increase kind of utilize this instrument, and we expect to see a high yield on it, and that means government is going to service debt without a higher fund. And when we are borrowing and we are paying for, we are going to pay for it because automatically when there's increase in NPR, you're going to pay more to get to service your loan, and that will also fall backward on the CBN again and the government. For me, I think they should look at a better way to handle this issue at this point, so that the economy will be on the right track, so that at the end of the day, it will be win-win for the economy and also people that are investing in the right way. See it. Also, at the same time, I believe that the government should come out with a policy or a fund that your side of generating revenue should be worked on, not only trying to tax the people. There's something we can generate. I said it here in this program that we'll have some security or some properties or assets in Nigeria.
Yeah, the talk is on, the conversation is on now about selling some of those assets.
That then you can convert them, sell them. Those are, at the end of the day, you won't be dependent on all this means and ways. At the same time, going to borrow that abroad or locally, the way we are coming to borrow, at the end of the day, this money are not free. We're going to service them. And once them automatically, as we are seeing NPR increasing, that is a kind of a burden on the government.
Absolutely. Well, moving on now, we are going to be looking at the NGX banking index. We saw that to a very large extent. They did well, especially some of the tier 1 banks. Despite winning sentiments in the Nigerian equities market, shares of tier 1 banks listed on the Nigerian exchange appreciated by 48.762 billion naira in the last 4 days. Notable among the gaining banks are Zenith Bank PLC, Access Holdings PLC, FBN Holdings PLC, UBA PLC, GTCO PLC, and, well, we have Stanbic IBTC Holdings mentioned there. A review of the banking index performance for the past 5 trading days showed the barometer that measures the performance of the banking sector grew by 5.62 basis points or 1.5% to close at 379.10 index points from the opening figure of 373.48 points. That was on the 17th of October. And now, in a related development, Airtel Africa PLC's share price fell for the 3rd consecutive day on Wednesday. Now, Airtel led the losers chart with a maximum 10% loss over 3 consecutive days, resulting in a loss of about 676 billion naira on Monday, 609 billion naira on Tuesday, and 548 billion naira on Wednesday. This represents a cumulative loss of 1.833 trillion naira. I'd like Mr. Omonia to start this conversation. What's happening?
No, actually, I said it when I was
you already talked about Airtel, but of course,
for me, for the banking sector, this is the toast of the market. Even before now, before the new listing of the telecom industry, we're not seeing the utility sector. Well, banking sector has always been there. One, this is the most consistent sector in terms of dividend paying, and also this is going to have the good volume that people can grow in and out, going with trading. And these shares in that sector are very liquid and marketable. That is why activity there is always on the top. But I believe that the opportunity sector presented before night, that before they release their Q2 number, those that paid into dividend, also their prices were down. People were expecting, are they not paying dividend? But when results after the half year came, most of them beat expectation, even though some cut their dividend payout, but the numbers itself speak for them. And knowing that also within this period of almost 6 months, from the date we start increasing our NPR to date, this sector will benefit more from it. That's going to reflect on their earnings at the end of the day. Investors are also looking at, okay, given that this price is opportunity for them to buy, that's why we are seeing activities in that sector. And I believe that it will continue towards the end of the year and even first quarter. Why? Because we believe that now they've increased interest rate from 11.5 to 13, from 13 to 14, 14 to 15.5. This also the banking sector will kind of renegotiate their loans and all those stuff. That will be more money for them. And not only that, you can see that TP have moved from almost as low as almost 5 points to almost 13 now, And also, if they decide to go and put money in, in treasury bill, they want to make money. They're not like individual like you and I. They want to really look at where we can take advantage of return, because they are financial institutions. They have the money to play around. I see that is why investors are kind of repositioning their portfolio. As I said earlier, sector rotation, where I see that earnings will continue, because I tell you, in any market, either bear or bull market, price feed on what? Feed on earnings. And if earnings are positive, tell you that dividend positivity will be there, and also there will be what we call sentiment, positive sentiment on that sector or individual stock.
All right. Well, Mr. Kofi, let's have your thoughts on this. The NGX Banking Index and, of course, Airtel.
Well, you see, for the Airtel, what happened in the Airtel is arbitrary. You remember that the price of Airtel in London exchange is half of the price of the Airtel in Nigeria, and they are the same Airtel. So people take advantage of that, rush into London, acquire more Airtel, and bring it to Nigeria, and that's what bring the price. You can see volume going, and I went to visit Airtel going further down, because the average now is less than 20%. And therefore, we'll see the reverse of it. People now acquiring more of Airtel and likely taking it to London to exchange and acquire foreign exchange. So we may see the rebounds back of the Airtel. As regard to the other sectors, I don't see much, because most of them, they are 52 weeks low. So the only way is to go up. And this is likely what is going to happen. And I'm not surprised if from now to December, I see the index going much better than what it is today. And this is advice for the institutional investors and the individual to now believe in our stock and take position. Because even by the dividend yield, you'll get a double digit. So why should you go and invest your money in the fixed income when you can even achieve that one in less than 6 months? Most of these banks will declare dividend by March next year. So in 6 months, you are getting 15%. Why don't you do that outside the price appreciation? So I see the market rebounding back, and the Airtel will no further go down, and this is likely push the index to go up and close much higher than what it is today.
All right. Well, Mukhtar, let's have your thought. I'd like you to react to what Mr. Kofi just said.
Totally agree with him, especially in the area of the dividend yield and also capital appreciation. You know, that's what I was saying even before now, that it's always good for investors to look at that. If you are going to be in this market for the next 6 months, there's definitely no harm that you won't gain capital appreciation, you won't get dividend yield. And not to forget that the election itself will come and will be a trigger for the market. Like I've said in your program, I think the three leading presidential candidates are the best that we've had for a long time. And again, economically, I think the market is going to really benefit from them. So definitely, once we have a peaceful election, which has become the norms now, we always have peaceful election. So I definitely think we'll see the market rebound before that time. But again, we'll see capital appreciation. And then dividend, of course, like I said, I don't expect them to pay anything different from what they paid last year, with the exception of assets, which has paid 20 kobo instead of their normal 30 kobo. All that, I think, will still be very, very fine. So I think investors should be shrewd, look at the numbers, and then come into the market. Like I said, there's no better time than to be in the market, especially if you are a shrewd investor or you are a value investor, especially. There are very good fundamental stocks that are selling at their all-time low. At the point, GTCO was selling at 52 weeks low. So it was a good opportunity for those that were able to key into that. I think most of them have made even a capital appreciation of up to 10%, even if the price have not gone that further. But I think it depends on which side you are. If you're a risk taker, then you come to the market. But if you are somebody that is still looking at the microeconomy issue, you're looking at the exchange rates, then you want to go to the fixed income space. And like Alaji is saying, unfortunately, I think the exchange too has not helped their cause. They keep talking about they don't talk so much about the opportunity that's in the equity market. They are trying to come up with products, and they're trying to divert people's attention to those products. Also, that also is not too positive for the equity markets.
All right, thank you so much. Well, we'll take a break now, and when we come back, we turn our attention to some of the earnings that have hit the market. Stay with us.
content creator, podcaster, voiceover artist, or show producer in need of a studio space or equipment for your project? Then look no further. We got you covered. With the very best of equipment and studio spaces at the most affordable rates you can ever imagine. For further inquiries, call 081-8236-4120 or you can call 070-68000168 or visit our head office at number 12 Old Olowara Road, Ojodu Berger, Lagos.
Despite encouraging a thrifty society and highlighting the importance of investment as an act that oiled the wheel of a dynamic economy, economists will argue that savings are a leakage to the economy. Investing is essential for expanding your money and keeping up with inflation in Nigeria. Over time, inflation erodes the purchasing power of cash. As a result, if you do not invest in a worthwhile instrument, the value of your monthly income savings will decrease with each passing day. The Nigerian stock market has attracted a large number of local and international investors, with the Nigerian equities market yielding 5% by the end of 2021, a far cry from the 50% it delivered in 2020. The Nigerian equities market was ranked top in the world among the 93 markets studied by experts. Over time, technological advancement have substantially eased the process of investing in the Nigerian equities market. However, there are a few pointers to keep in mind considering investing in the Nigerian stock market. Investors appoint stockbrokers to execute their buy and sell orders on their behalf. A stockbroker is a broker-dealer that is a member of the Nigerian Stock Exchange and is registered with the Securities and Exchange Commission. Easy access, affordability, since some firms need a minimum deposit to create an account, ethics and reputation, and their standing with the Securities and Exchange Commission are all significant elements to consider when selecting a stockbroker. You become
All right, thanks for joining us again. And I still have right here with me Ambrose Amodion, the CRO Invest Data Consulting. Thank you once again for being here with us.
Thank you.
And I still have with us, Kasim Garuba. Thank you once again for staying with us.
You're welcome.
Okay, well, today, right now, we're looking at the other financial institutions' Q3 earnings. We are doing their sector and comparative analysis. So we're starting from the turnover now, and we have three companies that we're looking at: UCAP, that's United Capital, African Prudential, and NPF Microfinance. So starting with United Capital, 2022, we have 14.54 billion naira, and in 2021, 11.32 billion naira. The percentage change there, 28.40. For African Prudential, 2.96 billion naira, and then 2021, 2.44 billion naira. The percentage change there, 21.44. And then for NPF, that's Nigeria Police Force Microfinance, 4.72 billion naira in 2022, and in 2021, 4.33 billion naira. The percentage change there, 8.93. Well, to review this, I'd like to start with Ambrose Amodion.
Yeah, I would say for the earnings so far released to the market, I would say these numbers are impressive. But we yet to see the big, cap, and also call them the big boys in the market, the life of Airtel, MTN, the first-tier banks. But for me, the big players, which are institutional investors, they are yet to take move in the market. That is why we see, despite this positive number we're seeing, the market is still oscillating, trying to kind of rebound, but still weak. But I believe that the more we see these earnings, because most institutional investors and the fund managers are keeping cash to watch what is happening in the market. Like one of my colleagues said that the time value of money staying 6 months and then 364 days, we can see the difference. For that, they are looking for those companies that are able to post numbers that will give insight that they sustain their first, second quarter positive number, which is likely to also repeat itself at the end of this quarter. Don't forget that the end of the year comes with a lot of seasonality that also boosts their number for the last quarter of the year. This also support the final number for the year, and that also gives them insight to where they should put them. I believe that yes, market will be double. Those that have the fund, when they start coming, despite they are not foreign investors for now, but when the PFA looking at what the numbers are saying, the dividend you are seeing and the capital projection, in addition to that, they might likely come back to the market. That is why people come and say third quarter result is likely to be the kind of respite for the market as we speak now, because if people start seeing these numbers start coming back in the next 4 to 5 weeks, we'll be seeing oscillation position for the end of the year and also dividend period in the first quarter of 2023. For me, looking at the number coming from United Capital, it's a sign that yes, those companies that are in that other financials are really doing well. Also, you could look at the cost related, because others are looking at diesel and all those things. But this sector, look at their what we call a profit margin, also their top line, so that they are eating to another market or expanding their business or introducing new product. For me, it's a good thing for the market. All
right. Mr. Kurfi, let's have your thought very quickly on this before we move on to profit after tax and the other indices.
Well, I'm delighted in view of the fact that these companies that have declared their results are financial services, so they do not likely going to benefit for the inflation. Yet they perform better than the inflation, and that gives the investors confidence that one, they can sustain whatever dividend they paid last year, they can sustain it, and they can even do more. And in view of this, I tell you that capital market is the best to go, because by the time you start hearing from the manufacturers who benefited from the inflation, from the cost of production, you will see that their turnover and the profit after tax and before tax will all grow ahead of the inflation, because they benefited from the cost of inflation. So therefore, it all gives us the confidence that if financial services can meet up this one, then manufacturing services will do better, because most of them, they benefited from even the inflation.
All right. I'd like to once again welcome Mukhtar Mohammed. Thanks for joining us again, Mukhtar.
Afternoon.
Okay, so very quickly, we are looking at the earnings of these other financial institutions. We started with their turnover, and now we're moving on to the profit after tax. And we have 3 companies: United Capital, that's UCAP, Africa Prudential, NPF Microfinance. So starting with UCAP, 2022 Q3 figures, 7.71 billion naira, that's profit after tax. And then in 2021, 5.96 billion naira, percentage change 29.34. Then African Prudential, 1.28 billion naira in 2022, and in 2021, 1.15 billion naira, and then the percentage change there being 11.93. For NPF Microfinance, we had 639.16 million naira in 2022, and in 2021, 766.17 million naira. The percentage change there being minus 16.58. Mukhtar, talk to us. What's happening, especially to the last one, NPF Microfinance? Talk to us about this.
I think that's what we need to look at. That's why I for one will be excited to see the results of the first tier, the tier 1 banks, and also, like I said, FCMB and Fidelity. What you see happening to the microfinance bank is I think non-performing loans has gone up, and so it affected their profit margin. So I think that will be the challenge going forward. Let's see, because of the difficult climate, especially the hiking rate. And so most of all these companies that are collecting on these loans might not be able to meet up. They may have to do restructuring of their debt profile going forward. So what we are scared of is to see the non-performing loans also jacking up a little, but I don't expect it to be too much. But for the microfinance bank, I think most of their customers are the little person that comes there to collect money to do one trade or the other. And then if you look at also the exchange rate volatility, look at the microeconomic issues, You look at the inflation pressures on goods and services, and most Nigerians also have reduced in the numbers of things they purchase. Some of them you used to purchase two, you purchase one now, and you wait until that one is finished before you go to get one, because your earning power has not improved. Yeah. So definitely that will be affecting some of these businesses that normally collect loan, and that's what will affect their payments. And I think for me, that is what is responsible for the numbers we've seen there. And also high costs, also in terms of high costs of by the price of most of them are on diesel 24 hours. The price of diesel also have gone up. If you look at most of even the tier one banks in the half year results, most of them, their costs went up because of issues like this, especially in the area of energy issue. So definitely, I think all that has contributed to what we see in the microfinance bank.
All right, thank you so much. Ambrose, let's have your thought.
Yeah, for me, looking at the three companies that we're just looking at, the PAT, who's the profit after tax, that really tells you what investor will get at the end of the day. There's improvement in UCAP and Africa Prudential. That is a sign that investor in that company will rest assured, depending on from them. But for me, on this level, I can say you can go ahead and hold your position, even accumulate more, because we expect that they will pay dividend, nothing less than what they pay. Additionally, they can even grow their payout. We saw what UCAP paid last year, about 150 kobo. The other one, Africa Project, around 50 kobo. And on the strength of their figure, they're likely to sustain, even pay more. We're not expecting any less than what they did last year. That is investor that prices also are pulled back to make this stuff cheaper and also attractive for investors, putting value on the table for them. And for me, it's a good beginning for any season. Yeah.
All right, Mr. Karuba, let's have your thought finally before we move on to the earnings per share.
Well, as I have said earlier, that they all did well, but we are expecting to see more in the other sectors. As you have said it earlier, that the cost effect of the diesel affected most of their earning, and that is why they have gone down. And then forget these are financial services. So they don't have anything to benefit where there is devaluation of Naira and where the cost of production. But for the manufacturing sector, which we are expecting their result, it will be entirely different. They were able to push the cost, and because they acquire this at a lower cost, because of the valuation of Naira, you see that they have made gain, both in terms of profitability and in terms of the valuation of the Naira, and all this add together to make their profitability much better than what we are seeing in the previous year. So we are expecting a wonderful result from most of the manufacturing sectors.
All right. Well, still on this, let's look at the earnings per share for UCAP, 1 Naira 29 kobo, and then for African Prudential 64 kobo, and then for NPF Microfinance we have 12 kobo. This is the earnings per share. Talk to us about this, Ambrose, especially for UCAP.
Yeah, for those that are looking for dividend, stock, we look at the earnings that are being, pushed to the market, and those that look at capital position to look at the welfare, the pay ratio, to know how long you're going to recoup your money. For me, I believe that the figure we are seeing or the numbers we are seeing are very, very okay, despite all this happening in the economy, the increasing headwinds here and there in the economy. We are seeing this number. It's an encouragement for investors to know that yes, until the end of the any season, then we'll not know whether these numbers will tell us if our GDP will still sustain a positive number. The one we are seeing is always giving us a signal that we might see also a positive GDP for Q3. If that is a sustained, that's a good sign for the market. They will now be looking forward. But for me, this is a good number for those that are looking for dividend income. Looking at UCAP having a 1 Naira, 29 kobo for third quarter, you can really kind of project at the end of the year. We expect either 170 or 180 kobo, and they can afford to pay the 150 they paid last year, even 160. For me, it's a good one for investors. And this yield, like I said earlier, that the fund managers are keeping cash, and some investors, fund managers looking at opportunity. Once this opportunity start cashing in, I'm telling you, as we see more number, you'll see how the market will be changing.
All right, that's interesting. So, Mr. Mukhtar, let's have your take on this one.
Well, in as much as I agree with the two gurus in their house, I always want to say that sometimes perception is really what drives the market. Sometimes the numbers are good, but the perception, sometimes, especially when you look at the economy, normally don't make us see the value in some of these companies earning, because if these results have come out and yet we are not seeing the kind of percentage move that we've seen sometimes, when this result comes out, you see the stock start going down. Sometimes you see investors are already pricing what the expected price is supposed to be and the expected dividend, and you don't see this kind of a movement that we see. But when you look at the result, definitely UCAP stand out. And again, that's a company that since they are coming to the stock market, they've been paying dividends, consistently improving on their dividend. They started with 1 naira, they went as high as 150 the last time. But will they go further than that? I think because of the economic situation, because tactically the world economic is in recession, and you want to have more liquidity, especially to take advantage of some good investment that will come up because of the recession. So I think it's a good one, but I don't expect them. I'm not as optimistic as Mr. Ambrose to say that they will be above 150. I think they might just maintain that 150 for now, trying to see how they can use the keep the remaining liquidity in their reserve to take advantage, either to grow their business or to go into new areas that I think opportunity will be after the economy starts its gradual recovery.
All right. Mr. Curfew, talk to us. Do you think they will go above that 150, or what are your own thoughts?
I don't see them going above that. It's likely maybe for African Prudential. But don't forget that UCAP always perform wonderfully in the last quarter of the year. If you look at their performance in the last quarter of the year, you can say that if they repeat the same, they can exceed far ahead of where they are. And if they so wish, they can decide to pay higher than what they have paid last year. But from our experience, they paid from 1 naira, they moved to 1 naira 50 kobo. If there is any, it may be marginal, maybe to 160 or 165. But I don't see much leapfrog jump for the dividend of UCAP. For the African Prudential, I'm not surprised if they pay higher than last of the previous year, because remember, they paid up to 70 kobo, they come down to 50 kobo. So I'm not surprised if they decided to push it up higher, and that reflected in their prices. For the microfinance, I don't see them paying higher than what they paid last year.
No, correct.
Okay. Well, you agree with him.
For microfinance, you can see that they already declined their result for police microfinance. Yes, and also if you look at their share issue, they will grow their share issue more than even the performance in their profit after tax. That means that share issue they grow also dilutes their earnings. They might not pay much. They can leave it flat to what they pay because they've added the additional share to their share, in issue. That also dilute the number. For me, it might be a flat number for police microfinance, but let's look at others like Alaji said, UCAP. Personally, I don't see them paying less than 150, additional 160 or 170, but I can't see UCAP. UCAP have shown strength, and this is one of the best run company on the exchange. I see that they maintain that so that they will see that yes, they are leading, and their investment company, I call them, investment bank, that name. For me, I believe that UCAP can increase their dividend to either 155 to show that when you are making progress every quarter, every year, you are bound to pay out to show the dividend that show investors that yes, you really appreciate their confidence in what we are doing. Good.
All right then. Price to earnings ratio, that's the PE ratio. For United Capital, 8.66. African Prudential, 8.37. For NPF Microfinance, 13.25. Mr. Curfew, talk to us about this.
Well, you see, the first two have a single digit, which is okay, but the last one have a double digit, which is a bit high if you compare to where they are operating the financial sector. Most of the banks, their PE ratio are in single digit.
Yes.
So I can say that based on the PE ratio, UCAP is good to go, African Prudential is good to go. But for the microfinance, we need to look at it and see that if they can do it better than where they are today. But for the other two, I have no doubt for me, by the time they declare their year-end, they are likely going to go below the current PE ratio they are. Even at the current PE ratio is good to go.
Okay. Very quickly, I will move on to the book value per share, but I think you wanted to say something, Ambrose.
Yeah. Just to add to what Alaji said,
okay.
When it comes to equity investment, there are three things investors have to look at.
Okay.
Whether you are in a bull market or in a bear market, the influence that company performance has on the price performance. But the major liquidity or fundamental that really drive equity when in any market is liquidity. And we have seen that since increase in rate, the market is having for me a low liquidity that was well reflected on it. If not, if it will be in a bull market, seeing you cap a result, the price will have been for 2 or 3 days, 4 days an uptrend. But because there's no liquidity market, despite that impressive number, it does have 2 days or a day movement. That's why I said investors should understand. That's why I said that sector and economy has about 50 to 80% influence on the market. Why companies contribute about just 20% of performance? If the performance is good as anything, if there's no liquidity in the market, the price will go nowhere. Whether in a bull market, you see it flying. In a bear market,
can you add perception to this conversation? Because I remember Mukhtar was also talking about perception.
That is the sentiment, and that's why I said a good trader should have what he or she is watching, because even when the number comes to the market, you see it on the chart, how people are performing, the psychology, the perception, and the sentiment of investors in the market. Like we said, we are not having long-term investors, let me for 10 years. These are people that are moving liquidity from fixed income to equity market, looking at opportunity and the time frame. But that is very, very important. Like I said, the time value of money is very key. That's why investors should look at between now and March is less than 6 months. While you are waiting for fixed income to make 15%, 14% on your yield and other stuff for a whole year, you should look at where can I make it. And if also by next year we'll not start seeing a repricing of or a setting of interest rate, automatically we'll see funds coming. But I tell you, as the World Bank is going, continue hike will find a place that we'll start seeing resetting of interest rates coming back. That will also attract a fund to equity market.
All right. Well, very quickly, book value per share, starting with UCAP, that's United Capital, 4 Naira 94 kobo. African Prudential Bank, 4 Naira 52 kobo. And then for NPF Microfinance, 1 Naira 93 kobo. I'd like Mr. Mukhtar to talk to us about this. Let's start with you. If you can hear me, Mr. Mukhtar, I'd like you to comment on the book value per share and what the impact this will have or what this means for investors. All right, I guess that's a connection issue right there. Well, let's start with you then, Ambrose.
Yeah, look at the book value. Like I said earlier in this program, the book value is more for kind of a quick, evaluation, because it's only when a company is really going under liquidation before you can look at more book value. But give an insight where the price is going, whether it's a discount or at a premium. But if you look at what the price of UCAP is now and the book value, you say this stock's on a premium, and that's why I say you have different model of evaluation. And this company UCAP have paid dividend all since it listed on the exchange. There is a valuation might different. That book value is not enough to say, hey, yes, because the book value is 4 Naira 95 kobo, this stock is attractively overvalued. As I say, these are the perception of the market that in a fundamental, how we call the fundamental analysis on the value, also in equity, in a technical analysis, what we call overbought and oversold. These are the things that I used to know to guide where the market is at a particular time or when if your stock is at a particular. For me, it's not about the parameter for now, but they can do better so that the more they have a good net asset, that will also further boost their book value per share.
Okay. Mr. Mukhtar, if you can hear me now, please, I'd like you to comment on this before we move on.
Yeah, I normally jokingly tell investors that I'm not interested in the book value that much. I want to see what is accrued to my pocket, and I go to the penny per share. That's what concerns me as an investor. But again, if you are looking at the lifeline of the company, then you begin to look at the book value in terms of the assets that they will have going forward. So you don't want to have a company that you collect dividend from this year, by next year or in 5 years' time, that company is no more in existence. I think that is the only thing that I looked at in terms of the book value.
It's good. It's good.
Like Ambrose said, the numbers look good. I still believe that the price as it stands now is being driven by perception. People are still not so convinced with the economy. And I think a lot of investors or a lot of Nigerians are so scared that they want to be looking at their money than investing their money. So that's why you are not seeing the kind of bullish one, and people are not too happy with the way this outgoing administration have handled the economy, especially in terms of policies. And well, I'm not saying this administration alone, but most administrations have not really looked at the stock market and say, how can we help this market? How can we? Okay, the last time we have a finance minister that looked at the stock market and said, come, stocks brokers, let's sit down and talk let's see how we can help people, was Ngozi Okonjo-Iweala when he was the minister. After that, we've not seen any of them that have seen the market as something that they need to look at and see how they can help the market to attract that foreign direct investors. If I could remember one time, the CBN was talking about, look, we are not interested in what investors happen. We are only interested in our clients, which are the customers. So when a bank goes down, we think of our customers. We don't think about the investors. So or some of these things in an economy that is now driven by a lot of fear. A lot of people remember some of these things and would rather just not invest their money than to keep investing. I think by and large, it's the perception that is going to drive the market in the coming days, especially if it is positive, the market will remain positive. But in the long run, like everybody have said here today, the market will be more of a value for any shrewd investor than to just keep watching your money go down with the inflation that we are battling in the country at the moment.
All right. Well, very quickly, let's move on to the profit margin now, starting with United Capital, UCAP, 53.04, African Prudential, 43.43, NPF Microfinance, 13.54. And for return on equity, that's ROE, United Capital, 26.05, African Prudential, 14.28, and NPF Microfinance, 6.15. Mr. Kurfi, I'd like you to tie these two together and talk to us about it.
Well, honestly speaking, this is an excellent performance.
Yes, sir.
When you get 53% of the profit margin, what it means that for every 1 naira they earn, 53 goes to the shareholders.
Yes.
And this is excellence. You hardly get it anywhere. So 43% for every 1 naira earned by African Prudential, 43 kobo is going to the shareholder. I can tell you, if there is any company to invest, this other company, because you are sure for every 1 naira you give them, you know what is coming to you.
Exactly.
And you can hardly get it elsewhere. For the microfinance, yes, I'm not surprised, but also has to do the function of their issue shade that would bring it down. But for the first two, it's an excellence, and I can tell anybody, good margin, go for it. Because good margin, you know what is coming to you. And this is an excellence. But when we look at the return of investment, they are not doing bad. Because honestly speaking, they have passed most of their indicators. 25% anywhere, anytime is good to go. A company that has a return of 25% on the asset is a company to be with. The other one, 14% is not bad, but for the 6% is very poor. I believe that, like what Mukhtar said, the bad loan, and we wait to see what is happening, especially this time when Moody decided to downgrade 10 of our banks by grading. And what it means that it will be additional cost for them to source support outside. Because once you are downgraded, you have to pay higher to earn anything abroad, and that will also affect. As regards to generally to the market, I can say that what killed our market is margin trading. Globally, anywhere you see the equity market, you see margin trading. Today, Forex is shining because of margin trading. Margin trading is part and parcel of the equity market. But in the Nigerian factor, we don't have it because CBN did not allow it. They just decided to take it away by saying that you cannot use margin facility from financial instrument. And financial instrument controls 60-70% of our market activity and control more than 70% of the market liquidity. So if you remove it, it's just like it doesn't exist. Allow the margin. At this current time, our market will go up, especially when we don't have foreign investors. If you allow margin, people are willing to take the risk. I'm one of them, and I can tell you that you will make money.
Okay. Thank you so much for your thoughts. I would have asked you more questions, but we really need to go. So in closing now, Bruce, let's have your thoughts.
Yeah, well, me, I would say that, like you said, we need the market makers in the market. We only have market makers by name in Nigeria. They are not functional. That means NSE need to do most of their job. Like one of my colleagues says here, NSE is busy introducing a product, even without educating Nigerians on the product they are trading. That's why those products they are introducing them were not seeing the impact on the market. So they will have a derivative, will have a FT, FT, the exchange traded fund. ETF, we have a lot of commodity, no, but people are not looking the word, because no education.
Right,
and that's the time for them. We need to go and bring
here.
what active what market makers to know the market active.
Thank you so much, Ambrose Omodio, for sharing your thoughts with us on the show.
Thanks
today.
for having me.
All right. Well, Mukhtar Mohammed, thank you so much for coming on the show.
Thank you for having me with these two very wonderful analysts. Thank you so much. It's a pleasure.
Okay. All right. Thank you so much, Alhaji, for sharing your thoughts with us.
Thank you very much.
All right. Well, many thanks to you for watching. I am Perpetua Fasa Repeater. Do enjoy the rest of the day. Bye for now. Enjoy the weekend.